It's finally happened. The Fed has just cut interest rates for the first time this year. So let's go ahead and talk about what that means for your mortgages, your credit cards, and your savings. On September 17th, the Fed cut rates by a quarter point. And this comes because of softening job growth and, unfortunately, rising inflation. So what impact does this cut have on credit cards? Well, your rates might come down slightly, but don't expect any big changes, especially too quickly. A lot of the cuts have already been priced into the anticipation of this Fed rate cut, and it's going to take multiple cuts for there to be real decreases in those rates. For your savings accounts and CDs, unfortunately, your yield is probably going to fall a little bit. Your return is going to fall a little bit because the yield is decreased when the Fed cuts rates. So now for mortgages, this is really what I care most about since that's what industry I'm in. You will have noticed that over the last month or two, rates have fallen pretty drastically, and we're now in the low 6 area as of recording of this message. So likely these interest rate cuts have already been baked in as well in anticipation for these rate cuts that the Fed just did today. And again, this is because of the job growth numbers and the inflation numbers. This is going to help those interest rates for mortgages come down. And we have to wait to see if they're going to stay down here, if they're going to bounce back up. If you're interested in pursuing something like an adjustable rate mortgage, those are going to respond more quickly and more actively to the cuts. But the fixed traditional mortgages, those ones are going to be priced in typically already. And as I said, we've dropped by quite a bit, more than half a point in the last month, 2 months. So for those of you who are waiting for interest rates for mortgages to get down into that 5% range, how are you feeling right now? Or you think it's going to happen anytime soon? Do you anticipate more rate cuts this year? Go ahead and share your thoughts down below. Let's have a conversation and figure this out together. Take care.